COVID-19 has changed many aspects of our lives in 2020, and this includes the landscape of digital payments. We're excited to introduce the MasterCard Division President for Southern Africa, Mark Elliott, to deliver a keynote on the impact the pandemic had on the adoption of contactless payment systems and the need to shift to digital payments.
Hello, it's a pleasure to join you at this very first virtual South Africa Innovation Summit. I'd like to start off with one word: unprecedented. In the wake of COVID-19, that word is just everywhere, in the challenges we face and in the efforts we're undertaking to fight the pandemic and its economic fallout. COVID-19 pandemic has become part of the new normal, as we know. Each day it presents us new responses from governments and organizations alike that in turn present new realities and challenges that we're all feeling quite deeply. All people who live and breathe tech, we often consider our ability to adapt to change and disrupt with a badge of honor, but suffice to say that the landscape in which we operate has transformed significantly, and in more ways than one we possibly could not have imagined a few months ago. So let me talk a little bit about the state of the industry. Before I look at what transformation means, let's look at some pre-COVID context about digital payments in Africa. Because in Africa, this has been undergoing rapid and fundamental change for recent years. Firstly, 57% in sub-Saharan Africa are financially excluded. While this statistic is much higher than the global average of 31%, good progress has been made over the last few years to close this gap. This is being driven by several factors, including supportive government policies and a new generation of financial tools and services accessed by mobile phones. And fintechs and startups are playing a key role in this transformation. They're leapfrogging legacy applications, leveraging the vast and growing mobile penetration in the region as a catalyst for financial inclusion. A sector that was once focused on peer-to-peer payments has now expanded to everything from credit to insurance to wealth management, offered through centralized cloud-based platforms. Solving consumer preferences and inventive technology are leading to digital-based, on-demand, and data-driven personalized models that are reimagining the way financial services are both delivered and consumed. While cash is still the dominant means of transacting, technology and the innovation in this space is changing the game. Fintechs are partnering with other financial services providers like banks, retailers, and telcos to solve these pain points through seamless experiences, bringing value, choice, and utility to consumers, all of which spurs the adoption of digital payments. Payments are proving to be a lucrative value proposition for other industries too, from healthcare to education and FMCG, as they look to create new engagement models with consumers. So the impact of COVID-19 really is seen in this digital transformation. While evident before, it's been accelerated. From a payments perspective, we've seen governments implement policy changes and measures to shift a greater volume of payment transactions toward digital payments. This is not only to prevent the spread of the virus, but also to stimulate economic growth. Small businesses have been deeply impacted. These are the lifeblood of the economy. When they suffer, we all suffer. Many of these businesses in Africa are informal, operating solely in cash, and the lack of resources and networks to enable them to navigate this new normal. They face challenges with cash flow, getting access to credit, and moving online, which brings additional cybersecurity risks. So from a customer perspective, we've seen a notable change in how people live, work, and interact and consume. As people adapt to social distancing, they've shifted to digital channels and payments away from cash. Contactless adoption is gaining momentum. During South Africa's lockdown initially, MasterCard conducted some research, a study, and the vast majority, 75%, said they're using contactless payments due to safety and hygiene concerns. 64% of South Africans said they'd either reduced or completely stopped using cash altogether since the pandemic started. And this is a trend that's here to stay. 8 in 10 said that they will continue to use contactless once the pandemic's over. We also see similar findings across the world, and contactless transactions are now growing twice as fast as non-contactless transactions. Contactless has been a boon for retailers, both small and large. This is mainly due to faster checkouts that reduce long queues and the consumer's reluctance to touch anything other than their own card or mobile device at point of sale. New technologies like MasterCard's Tap on Phone, which turns an Android phone into a contactless acceptance device, is further supporting small businesses to adapt to this new trend, while fintechs like Akoka offer low-cost mobile point-of-sale devices to traders in the informal market, using the transaction history to give cash advances. There's also been a rise of e-commerce. E-commerce is another area which experienced growth in most sectors, since people don't necessarily want to visit physical stores like they did before. According to MasterCard data, for every $100 spent in Middle East Africa, half, $47, was spent on e-commerce in May, compared to a third, $35, on this figure in February this year. A recent Nielsen survey indicates that around 30% of consumers in South Africa, Nigeria, and Kenya increased their shopping online. If the customer journey has some bumps along the way,